Okay, so India's 2026 budget is out, and it's getting a ton of praise pretty much everywhere you look. But what if there's another side to the story? A much darker side. Today, we're diving deep into a contrarian analysis that says this celebrated budget might actually be a disaster waiting to happen.
Right? It's a huge contradiction. On one hand, you've got all these headlines calling the budget visionary, and on the other, you have this one analyst sounding the alarm, calling it a disaster and a fatal blow for investors. So what's going on here? What is this analyst seeing that everyone else seems to be missing? Let's get into it.
To really get a handle on this, we're going to break it down. First, we'll look at a massive policy change that's kind of buried in the budget. Then, we'll get into the three big criticisms that form the core of this whole contrarian argument. And look, this isn't just a simple disagreement on policy details. This is a fundamental clash over the future of the Indian economy. The analyst we're following believes the market is getting caught up in the hype while completely overlooking some huge red flags tucked away in the fine print. All right, first up, the big pivot. For more than 10 years, the big slogan has been Make in India, all about manufacturing. But this budget, well, it signals a major shift in strategy, and some would say it's long overdue.
So, for over a decade, the whole game plan was to make India a manufacturing powerhouse. The only problem, it never really moved the needle. The sector's share of GDP just stayed flat. So now, the government is finally leaning into what the analyst calls India's real strength, the services sector. And the new goal is incredibly ambitious. We're talking about nearly tripling India's share of global service exports.
Now, to be fair, before he gets into the criticisms, the analyst does give credit where it's due. He says, look, this pivot to services, it's the right call, even if it's late. And simplifying the customs duties, that's a smart, practical move that'll make trade easier. But that's pretty much where the good news stops.
And here we go. This is where the gloves really come off. The first major criticism is a new tax policy that our analyst believes is an absolutely devastating blow to the market.
So, to understand why this is such a big deal, you need some context. Just look at what's been happening. Since 2019, the number of retail trading accounts in India has exploded. We're talking a more than five-fold increase. A whole new generation of investors has flooded into the stock market. And just as millions of these new traders are getting their feet wet, bam, the government hits them with this, a staggering 150% hike in the securities transaction tax, or STT, on futures trading. Options trading gets a 50% hike too. This is a tax on the transaction itself, and that is a massive, massive increase. And this quote from the analyst just perfectly captures the feeling behind his argument. He says, the government basically encouraged this whole new trading culture, and now it's bringing the hammer down on the very same people. So what is this STT anyway? Well, simply put, it's a direct tax you pay every time you make a trade. Now, the government's official reason for the hike is that they're trying to protect retail investors from risky behavior. But our analyst, he thinks the real motive is something else entirely. So who actually gets burned by this? Well, you might think it's just the small retail guys. But the analyst argues that the biggest victims are actually the foreign institutional investors, the FIIs. These are the giant global funds that provide a ton of the money and liquidity for the market. The big fear is that this tax is going to make them pack up and leave even faster. It's not a protective measure, he says. It's a pure and simple revenue grab. Okay, but the criticism doesn't stop with the taxes. The next huge issue is what the analyst calls hollow promises. You know, these big, splashy announcements that sound great, but might not have any substance at all. The budget makes some really bold promises about tech, especially in AI and data centers. But the analyst's take is that these plans are, and I quote, hala Hawaii, a Hindi phrase that basically means they're all air, just totally impractical and without any real foundation. Let's just take that data center policy and break it down. The government's offering this massive tax break for centers that have foreign clients. Sounds good, right? Well, here's the problem. Major places like the US and the EU have really strict data laws that don't allow their citizens' data to be stored overseas in India. So, who exactly are these foreign clients going to be? And to top it all off, India doesn't even make the high-end chips you need for these things, so the entire industry would be completely dependent on expensive imports.
All right, red flag number 3. Look at this number.
17.2 lakh crore rupees. That's about 200 billion US dollars. This is how much the government plans to borrow from the market this year, and it is way, way higher than anybody was expecting.
So what does a number that huge actually do? Well, it can lead to this classic economic problem called the crowding out effect. Think about it. When the government wades into the market and starts borrowing that much money, it basically sucks up all the available capital. That makes it way harder and more expensive for private companies, the real engine of the economy, to get the loans they need to expand and hire people. It's a huge concern.
So, with all that said, let's pull all these pieces together and look at the analyst's final, pretty grim verdict on what this budget really means for India and its investors. Beyond those three big issues, the analyst points to a bunch of other worrying signs. He questions the basic math, asking, wait, how is the deficit going down if spending is going up? He also points out that the whole thing seems to be built on risky bets, like oil prices staying stable. But maybe the most alarming point he makes is that he sees language in the budget that hints at a major geopolitical shift, one that could put India's crucial relationship with the West and its huge IT sector at risk.
So when you boil it all down, it comes back to these three core arguments. First, you've got a tech policy that sounds great on paper, but is basically unworkable in the real world. Second, there's massive government borrowing that's going to squeeze out private companies. And third, a really damaging tax hike that's going to punish the very investors India needs to keep in the country. Which leaves us with the million-dollar question, doesn't it? Is this budget the visionary plan for growth that most people say it is? Or are these warnings from our contrarian source right on the money? Is it a collection of hollow promises and bad policies that could spell real trouble for India's economy? I guess only time will tell.